Okay, what's up, guys? So, the songs are here. Then I just decided to create a video that I'll upload to my YouTube. To actually deliver that I uploaded. So, not actually the YouTube, I will also be looking for my YouTube. Then I just want to share a breakdown on how I've been trading BTC using for the past 6 months now. So, literally every trade I've been taking since this time. So I want to just show you around with how I've been taking the trip. So let me then focusing on my chart. Please. Um, let me go back in chat where I started doing this. Where I started trading this when I took BTC very serious as one of my favorite players because I really love trading BTC. So when I met BTC, I saw BTC actually. So I read my instruction. I saw that our major move here than my village because there is a major market structure shift over here. So I had to wait. I had to wait for market to come back to the old region or to it last for that block. So when market investigated this one, I didn't actually took this aggressive fight because then I started focusing on BTC like newly. Just out of let me say lack of confidence, maybe not to take this fight on BTC. I just recently added it to my play. So as this movement actually happened, so then I caught there was a 5 minutes buy. I caught it. So I can't switch to 5 minutes, fast switch to 5 minutes. I'll be able to come back to this. So I'll just from here we show you what I did. So from this place now I caught the 5 minute buy. But my target was just this high, this high, that 5 minute buy, that 5 minute, so the 5 minute buy. Actually, how I took the buy is that there was a breaker block. The market was reacting to the breaker. So, but then we took out this liquidity, this 1 hour over that happened. All this was happening in 5 minutes. So, as market took it out, I waited for 5 minutes confirmation. So, I took this loan from here to the even the stop was not at 5 minutes. And the trade was actually a 1:8 trade. So, that loan is. So, this was how I took the buy. I will show you before three. So this is before three, four when I call the second. So it's very perfect that. So secondly, I had this zone. I had this zone marked as this other block here. But I said I will be taking the trade with confirmation. So market gave me a confirmation here, but I wasn't active in chanting because I'm a student. So I wasn't active on chat to see what's happening here. So I didn't take this particular one. The market gave me confirmation. There was a 45 minutes of block there. So this was the liquidity. So I said, okay, I missed the first buy. Actually, this buy would have delivered the 1:8 for me, but I didn't engage on this buy. So this was the buy I engaged on. I had this on. I had it. had this zone initially before market came back to it. So I had this zone, and here was my liquidity. Because our strategy is SLP, structure, liquidity, and POI. And when market did this break of structure, what is a break of structure? It's a break of structure. The market gave me this pullback, and if you watch, we have we have three types of entry model. The first one is, let me just give a skeleton of the entry model that I use. So if my market is bullish, let's say we took out, let's say we had a what do you call it? Let's say we had a break of structure or something like this. A break of structure. Now our first pullback is what we call inducement. So we're expecting the market to make another high, maybe break it from out, then come back, then deliver the high. This is the first one. So for the bearish scenario, we have something like this. Market will come and the market will just come and take this one. This is for the bearish scenario of this one, of the first entry model. Then now this is the second one. Let's say market will just give you a high, they will start giving you a first pullback, which we call inducement. The market on reaching your POI or reaching your other block or breaker block, anyone, it will then give you a little pullback, something like this, then come back and by taking out this place and see your liquidity. This is what we call engineered liquidity. Right, this one is what we call inducement. This kind of liquidity is what we call inducement. This one is an inducement, or this one is engineered liquidity. For the bearish scenario, we have something like this. Bearish scenario, we have reaching your zone. Taking out this. It's not a must that the POI must be other block. It might be an other block or a breaker block. Just sharpen your eyes to see the market will form all this for you. Another one is you'll see something like this. The third entry. The third entry is the market will give you a high. Then let's say we had a high already. Then when market is now heading up to bigger side, you see something like this. It just give you a pullback. Let's say something like this, pullback before taking out the high, then come back and take out that little pullback as a good, which is an investment. Now for the bearish scenario, we'll have something like this. Have something. I'll put the back here. So these are the three entry model I use. So for my markets, for market analysis. Now, all of my entries are revolving around this structure or around this skeleton asset, around this structure assembly. So when I have when I have this back, if you watch over here, market didn't give us any form of inducement or any form of thing for buying. So I had to wait for market to give me a little deposits, which is this. Then I had my entry already. I said, okay, the market has given me a little deposits. Then I'll be expecting market to come back to the zone to come back and take out this particular leg as liquidity, then bouncing from this OB and buying, which is this trade model, which is this one, which is this one. So, but the market chose to beat it. But I still had my limit. I still had my limit. The market did then traveled all the way up, and still came back and mitigated it. So and now if you watch now, this particular entry model has shifted from this one to this. Look at it. Market gave us a break of structure, gave us a first pullback inducement, then bought, made another high again, then came back, taking out that low and mitigate and start buying. So, but then when market was pushing up, I would just say, okay, let me just use this place as my target. Yeah, as my target. Let me use it as my target. So I have my buy position from here. So this was my target for the buy. So then as market was buying, so when I opened my chart, I saw another buy opportunity which I can capitalize on. But then I used a confirmation entry. So this is it. Market made it high. Look at it. Like, let me break the structure. So this is a break of structure. This is another one here. Then that one. If you watch, after market gave us this break, we had our first pullback in this month. This is it. Yeah, first pullback in this month. The market took out this guys liquidity bouncing from the breaker block over here. But this one I didn't take it trade. The breaker was actually the market was, as you can see, it delivered. We had another break of structure. The market gave a pullback. The market after market gave us this first pullback, which is our liquidity, the market came back again and took out this. The first pullback was given, which was this one that delivered this one over here. The market then came back, taking out this place and liquidity. It was actually a H4 or other block. Let me go to H4. You see how I got the entry. So this was it. This was the liquidity. The H4 that block. This was the other block over here. This was the other block. So I wanted to place my entry on this H4 that block, but then the SL was way too big, so I had to wait for confirmation. So the confirmation I used was actually a 15 minutes confirmation. But if I scale down to 15 minutes, I'm not using premium for the increase. I won't be able to come back to this. Let's just use the 1 hour. Let's get back to the chart. Okay. So after marketing, we take my H4 that block. So I had to wait for confirmation. So market then gave me confirmation here. Then take out. This was the guy I actually used for my break of structure. My market structure sheet. So after market gave me this market structure sheet. So I will take my first pullback and this one, which is this guy, this pullback over here. So but then market has already used the breaker to actually build an investment for me. It has already mitigated the breaker, so I won't be using the breaker as a point of interest. I used the 15 minutes holding, which was this. I used 15 minutes holding and still had the same target with my initial number. So this was it. I had this entry around it. I targeted gas engine. calculated as this was a 1:9 app trade, and this one was 1:11. So the both of them was 1:20 app trade on BTC. So I actually saw this Bible. I didn't take it. This one over here. I didn't take it. Didn't take it. I wasn't I wasn't too convinced by the conviction on the price was too low, so I didn't take it back. But as market made this high, as market created another high again, it's high over here. Okay, so okay. And it's time to look at another buy. So market then give another break of structure. So and internally I saw a complete market here. Like a complete market structure here. So that made me to engage on buys here. I use this guy as my other block. But market just pushed up a little bit and then came back to stop me out. I'll be showing the before of all this. So market then came back and stopped me out over here. But I had an SL here. So there was actually a trade I took here. As market was proceeding lower. So I came here and said, okay, I'm actually bearish. So there was a liquidity wave out here. Then we bounced from the breaker block. This was the breaker from here. We bounced from the breaker here. Then took out this high as a liquidity up. And then I said, okay, this one is actually a strong zone. So this is where I actually made the market. This was when I was analyzing the market. I said, okay, this is another zone against on sales. So I saw this zone. Then this was the liquidity to the zone. This was when I was analyzing the market. And then this was where I entered a sell from it. So this was it. Yeah, this was if you go down to the 30 minutes, there was an old here. Or going back to the 30 minutes, not sure what they were allowing to do. So this was the liquidity to the sell. It was like so yeah, this is where I targeted. Targeted this. There was a daily jump of liquidity. Okay, this was the breaker block I targeted. Yeah. But then another zone that could reverse market up. So I took that sell. Actually, I'm not a break-even trader. I don't break even. So actually, market nearly came back to my entry. Nearly it came back to my entry. So this was the trade I had. This was it. So market delivered. So then that my breakup, that zone of mark said that it actually a place that could pushed that could actually that market could actually react from. So I had that zone. So the market then gave me this series of the structure break. So I told the market had its market structure shaped and took out this zone again. Then gave me my first pullback and reducements. So I actually played the nearest zone to my eye, which is this breaker over here. But the breaker was way too big. Way too big. So market nearly stopped me out. Actually, the market stopped me out. But I was a bit greedy. So I had a buy idea. It nearly came to my SL. But then this was when my target was. I was targeting this zone. This breaker over here. Breaking down. This was my target. But it's also a reactive zone for the market. Then the market just delivered this high, then came back and stopped me out. So, but then, as market stopped me out, I was bearish. Despite all this thing that was happening here, that market has really swept liquidity, then gave a market structure shift. I was actually bearish. So, and I then said, okay, the market made a low. like had made a break of structure on the downside, which is this. Then my first pullback on this thing. Then my nearest zone to the P was this breaker. So I did use it. The market came, but then my target, I didn't actually targeted a very high average. I was just targeting this low. Yeah, I was actually targeting this low. But before this happened, I had it. Yes. I had a sell from here. I had a sell from here. They will say I had it. They will say I had it. Yeah, I had a sell from here. But then it was in a smaller time frame. So I had a sell there. So I had this first zone. Why am I doing that? Market swept a high, then gave me a bit of a market structure shift. The market gave me market structure shift. So then this was my liquidity zone. Here was my liquidity zone. Then if you can see, market gave me a pullback before a little pullback, which is a little deposit before giving me a market structure shift, which is this endpoint level, which is this one. The market will give you a pullback. You look at this particular thing here, and before giving a market structure shift or break of structure, if you then come back and take out that little pullback, mitigating from any pure high, then proceed lower or higher based on the expectation of the market. There. I'll still show you before this one. So I had this. So it was how I'll still show you before the trade. All our documented in my phone. So I targeted there was a liquidity I targeted here. Yeah, and this low because the SL was very, very snappy. Like I said, SL, the TP was, like I call it a sniper TP. Or this was where I targeted this one. Market just took out the low and it's a very sharp rejection. So this was the sell. This was the sell. I had the sell. So and again, I had this sell also. So the market then gave me a little reaction, then stopped me out. And but then I was still skeptical about it. But after market took me out. So then I then said, okay, we are actually bullish. That we're not supposed to take out this low because this is a break of structure, and this structure now took out liquidity overhead. Market took out liquidity overhead, so we are not meant to take this low. I was actually expecting for a buy, but this was on Sunday. Like it was on Thursday. Yeah, I took this buy, but it was so a stop loss. Took this buy using as my liquidity. Here was my liquidity. Here was my liquidity. So this was when I entered my losing streaks here. It was not only on BTC but also on gold, euro USD. I entered my losing streaks here. So market stopped me out, gave me a little reaction, then stopped me out. Again, as market was coming, and then I said, okay, here, that zone for this is a breakout because as market has took me out. I said, okay, this is a zone I'll be expecting sales again. Expecting sell. That here is my liquidity to be sell. This is my liquidity to sell. I had another SL. I had another stock. So I entered the losing streaks here. I took about 9 SL in a row. And all this happened in 2 weeks. But I don't take more than 4 trades in a week. So I had 9 SL. This was the first one, second one, third one. I had two on gold, and I had one on Euro USD, and also had two on GBP JPY. That was when I was trading 4 pence. So after I took the last SL, I had to take a break. But what market did. I had to take 1 week break off of the market. So I took 1 week break off of the market. That's actually for my head because the SL was actually much. So when I came back, I made the market here. I made the market here. I made the market here. The market has already indicated this. Now, how this zone came to a new top. Market gave us a bit of structure. Then our valid first pullback, which is inducement, is this. Is this. Is this. So the markets then now let me explain how this entry model is done. After market made a high, there is no valid liquidity near our other block. Or so maybe we'll be looking out for buys here from this breaker. Actually, okay, from this breaker, yeah. Which markets used to build an engineered liquidity for the OB, because this was liquidity that was meant for the breaker, but the first retracement couldn't mitigate the breaker. They made another. They did a push up a little bit, then came back to the breaker, then pushed up a little bit. So right now we'll be saying, okay, market has already given us a broker structure, market structure shift. They want to engage on buys here, but then having a quite knowledge in the markets, this kind of entry model is when market like you don't have a clear inducement near your OB. The market will just come, use either the breaker then to create an engineered liquidity for you. Now this is a tip for you that whenever you have an OB and that OB or breaker doesn't have any liquidity to it, if you have a double OB, market will use the first one to create a liquidity for you. Then use the second second breaker, then to deliver all. Like now, the market will use the first one to create a liquidity for you. Then use the second breaker block or other block for the mitigation and the impulsive movement. So this was when I met the market after I took some break off of the market, because sometimes it is actually good to take some time off the markets if you are hitting SL on the back-to-back level. So and then say, okay, this is my next zone for buys because of what? Market gave me a pullback before giving me a market structure shift, which is this kind of market structure shift. So this was the liquidity I used. So I was actually expecting the market after taking out, because this was the pullback gave me a market structure shift over here. So I was actually expecting the market to come back and mitigate me, but the market was traveling up high, was going up. So then but I still knew that my setup is still valid. So I waited, and the market came back and mitigated and triggered my zone. Market came back and triggered my zone. So instead of having because initially my TP was just around this high, but because of all this impulsive move, I extended my TP to this high. So as the market was proceeding, I said, okay, I'll still look for more entry spots. My entry will only come when this high has been taken out. This high. Now, look at what the market did. After taking out that high, it gave me a first pullback, which is an investment. But me having a right knowledge like on how structure of the market looks like. So I had to wait. I said that I had to wait. So and I analyzed that because some of us now we say okay, these are our first pullback. This market went up and you will see a little break and they take their buy. Well, actually the trade was valid, but you now trying to hold this particular buy to this high is actually wrong. It's actually wrong. Because if you watch, market had to come back 50% of this movement here, of all this movement before going higher. So and again, market gave me pullback before taking out this high impulsively. So this was my liquidity for the buy. Then this was the OB I used. I'll still show you before trade of all this. So if we all just say that I'm just talking out of what I'm saying, or out of already played price. I had before before and after setup. So I had another buy here, the second buy, still targeting that same zone. So on this two trade, it was the first one was 1:8, the second one was 1:9. So the both trades actually delivered 1:17. 8+9. Yes, 1:17. So that was it. So then again, now there's something about structure that many of us don't understand. Now if you watch how I took the minus buy, so this zone now was not taken out. As it was not taken out. So I actually saw so many of us saying that okay, we have already taken out a high. So we'll come back, we'll take out the last leg before buying. So I saw so many people marking out their OB this way. They used H4 OB for this, yes. So an H4 OB for this. I saw so many people marking out this place. They're using these lows as their liquidity. This low liquidity. But I actually read the markets. Whenever markets will take out the last OB, is when like let's say the market swept this high. If market eventually swept this high, it means that every other internal range will be going, but market failed to sweep this high. So leaving us with this structure, with this high, as the last buy structure. But if you watch, we had this first one, then this one was used for liquidity and all that. Then this was our last paper structure that we had in the market. So I had a buy. I had a buy from here. Let me know whether I can go to the 30 minutes now. So I had my buy from here. I said this is not good because market gave me pullback. So I watch. Market gave me a pullback before the massive deposit. So this is a liquidity deposit. This guy is a liquidity deposit. Liquidity deposit. So this is a liquidity. Then I used this zone. This is actually a 15 minutes order block. I can't go back to 15 minutes. So I use this guy as my buy my points of interest for the buy. But I extended my SL because market could actually want to sweep it as liquidity. So this is what I did. I opened the buy position. I didn't actually capitalize on this sell because I'm a student, so I found it taking every move I see. So I'll just actually wait for market to come to my zone by react. So this was the zone. I actually had a limit order there. So the limit order. So I targeted this high. targeted this high. But while I was doing all this buy, I already had a sell on mine because all this buy you are seeing over here was just a was just a retracement, a major retracement for a sell. So let me tell you where I had my, see, from the weekly time frame. Okay, from the monthly time frame. I already had a monthly zone there for a sell. For a sell. When all those buys were happening. This was really had a sell zone. No, it was a weekly. Let me check the weekly. Let me forgot it. And it was a weekly. Yes, I used this little guy, this week as my key level. But I'm actually using key levels for my bias. Then before I will scale up, then go to the lower time frame. I'm looking for my entries as an S&P trader. So this was where I have for sales. But then the markets use this monthly key level. This one I never know for more precise reversal or more precise sales zone. Look at it. So still using those all these highs. Now, if you watch the market close out with a CRT, I don't actually look at CRT that much. It's a CRT. So this it actually took out the previous monthly low, monthly high, which is the April. Yes, it was the April high. It took out our liquidity. So I was actually buying this liquidity point as market basically like just reached this my liquidity zone. Actually stopped buying and I was waiting for sales. I'll still show you when I had the bias for that sale. I haven't posted it on my X account yet. So as the market went to that zone, so that era was when I was actually preparing for my exam. So I didn't have enough time for the chat then. Didn't have enough time for the chat. Didn't have enough time for the chat. So as markets went to my got to my zone, this buy. So this was where I actually stopped buying. So I saw that I was taking buy, but then the advice was looking nice. But I had a sales on my mind. So this was the first zone I saw, but I didn't actually react to that buy. This is the buy. Why? How did I get that buy? This is actually how I got the buy. So as market exceeded this my weekly zone, I had to go to the monthly to see a more precise zone. So I saw this zone, this particular one here, this one. I said, okay, this is zone I'll be using for my sell bias if market gives me a complete structure. So we had this previous structure right here. For me to confirm my bias, I had to wait for this low to be taken. Then the low was taken out. But then this sell, I didn't even take it. I didn't even pay attention to it. So, and most of my entries just, most of my targets, most of my Arab, I just love stopping my trade at at 1:8 Arab. Just love stopping my trade Arab. So I didn't be like some big sell. I just target 1:8 or target this low that market made, which is the more actual secret that anyone should do. But me now as a 1:8 trader, I will love to target this low as as my liquidity to actually make it 1:8. I don't know. I've actually built my psychology around 1:8. That's why I actually wait for impulsive movement instead of taking retracement. Like for me, before I take any retracement movement, it must be a major retracement before I look at any retracement. Maybe a major retracement. So, but this particular zone, this particular cell, I didn't engage on it, so I'll be deleting it. So this was where I started engaging on cell after my exam was coming to conclusion. So I then had some time for the chat because now I was writing the exam and I was preparing for exams. So this was, but the first sell I took was a missed entry. So Market reacted from this breaker block here, this breaker that is here, then taking out this high as liquidity, this inside drive liquidity. So this was when I was analyzing the market. So okay, now this zone now is nice strong zone. Now, as markets broke this, give us this low. As market made this low, it retraced, then it gets this. This was a 15 minutes OB, 15 minutes OB. Then I said, okay, after market made this low, taking out these two lows, which is a break of structure, in the direction of that my weekly or my monthly bias that I had. After market took out this low, my first valid pullback was this high over here. My first valid pullback was this high. But then it was the most important. I used this 1 hour OB. This one is here for my sell for marketing etiquettes. So I had the sell like this. I just targeted 1:8, even though the market made it movement more than 1:8. So I was just focusing on only sales. I was just focusing on only sales. Then this was 1:8 I targeted. Market delivered the 1:8, but it was a missed entry. So after markets delivered and was coming up, so I had to analyze for another sell. I had this sell here. So okay, this is my next sell zone. Why did I use that as my next sell zone? After market took out this low, it came back, it gave this high. It gave this high. Then took out this guy's liquidity. This little singular liquidity. So now actually said, okay, this guy now, this particular movement, this particular FNG now is now a strong zone. So okay, I'll be looking for my cells here. This is the actual OB I used for the cell. Because if you watch internally, when I was analyzing, say okay, internally now, market gave me a pullback, which is this one, before making a low. So that zone now has actually swept liquidity. It gets from a high and then proceed lower. So I said, okay, that zone now is now a strong zone. So I said, okay, now this is the last open zone in the market, and then it has a liquidity to it, which market gave me a pullback before my actual break of structure. So I had another sell here, but on this sell, the sell was actually like the structure now was actually too open, because market might use all these highs 1, 2, 3 as liquidity. So as I had my sell zone here, I had to cover the whole zones, like the whole range, the whole invalidation zone, because if market takes out that high, then I'll be waiting for more bias confirmation. So I had this sell like this. So I just targeted 1:8. So this 1:8. Yeah, I did something like this. So but market delivered. So I couldn't get any entry. Here was a bit confused for me. So I didn't get to know what markets did here. So this was where I could have actually gotten a sell from here, but I didn't pay attention to what is happening here. So I only caught one sell. I only caught one sell from all these sell buys that I had. This one was a miss entry. This was a win. I didn't actually engage on this. So there was a sell here, there was a sell here, there was a sell here, but I didn't engage on those ones. So this was why I actually engaged on sell was here. So now this is what I did here. After market took out this low. After market took out this low, right now 1, 2, 3, 4, 5. After market took out this low, it gave me a first pullback, which is this guy. an inducement and liquidity. But for me to pick my POI, like I went to the weekly. See, let me check the weekly. Went to the weekly charts. Went to the and this is how I feel. I got this bias on that side I took. So as market took out that low, this low now. So and it was a body break. I know that I'm still bearish on price. But then I had this key level over here, this key level. But there is no liquidity to the key level. So as market was making this retracement, what I was expecting that I want market to just close out near that my key level, then taking out that weekly high as liquidity, because this retracement now here did not even took out any zone here as liquidity. So what I actually call this guy is the inside bar. So inside bar liquidity, because it's inside this whole zone. So then I said that I'll be using here as my liquidity. Don't mind the way I'm speaking. I'm actually new to all this. So I had to actually wait for this weekly to close near my key level. So as market closed, then I said, okay, this weekly zone is now my liquidity level, or this key level. So then I scale down to the H4. Or the H4 that I got that sell from. So this was it. This was where the weekly liquidity was resting on this. I didn't use this one. It was resting here. So I had to look for my sell zone here. So then I used, after getting my sell zone, so this was where the final liquidity was here. And this was my key level, that my weekly key level I had. So there was some structure inside of here. It was at the 1 hour. Let me still go down there, show you what happened. How I got that my zone. So this was it. Yeah, this one. So this one actually took out the then sold from this level, and everything is over here. And the OB also took out this liquidity. So those zones are actually protected zones, actually strong. This was it. So coming to this side again, you see this liquidity over here. This liquidity over here. Then this was the other block that the market reacted from. And I said, okay, this zone also is actually strong. That's where my SA will be resting, this place. So then I said, okay, where is the next zone for me to take my sell? Actually, I didn't see any ideal zone to take any sell from here. So I had to go to the H4 to know where I'll be taking my sell from. Okay, then after going to the H4, I saw this indecision candle. This guy over here. This is actually how I took the sell. Let me take this. This is how I took the sell. This sell. So my SL was just resting at that high. Just resting at that high. I had the sell like this. The sell actually nearly got my SL got them delivered. So I targeted 1:8 as usual. So market gave me 1:8. So what market was after I got this entry, the market started retracing. I said, okay, let me look for another re-entry zone for the sale. I went to the 2 hours charts. This was where I got the re-entry was coming from. I said, okay, this high, this leg high here, this guy here actually swept liquidity. So it's a protected zone for me. Now, after making a low, this was the first pullback, our inducement. But then I used these 2 hours OB. for my sell, but the market failed to come to the zone when deliver. Then it was proceeding lower. So the second one was a miss entry, but the first one was a win. It was actually a miss entry. So I actually had a miss entry here. So when market got here, all these zones, all these things that was happening here, I didn't get to catch any trade here. All these buys that was happening, I didn't get to catch any buys here. But it was actually fine. It actually gave a fine opportunities here. Like example, this place, a sweep, market structure shifts, a pullback, the market was buying. Also, there was also a 15 minutes when I was analyzing what market did over there. But I didn't get to catch any setup there. I was actually paying attention to Euro USD then because I say that all those things all these things happening here, they are retracement, but actually the retracement is a major retracement, but I didn't pay attention to it. So this guy gave a 15 minutes. I actually saw this trade, but I didn't capitalize on it. The 15 minutes, this was the OB. 15 minutes OB. This is it. And this is the liquidity to kick off, but I didn't take the trade. They actually capitalize on it. So all these guys, all these things that are happening here, I didn't actually capitalize on any trade. So this was where I wanted to capitalize on. But I don't even know what happened that day. So I had this zone. I was waiting for confirmation on this zone. I had this zone. The market came to the zone. I actually saw when market came to the zone. I just said, okay, I've entered into confirmation. But when the confirmation came, is he at the Asian section or something like that? Let me check. Yes, it was actually before I woke up in the morning. The buys has already started. Yes, the buy has already given its confirmation and started. Yeah, that's what happened because the buy came around 2 o'clock in the night, but then I was sleeping. It came about 3 o'clock in the night, but then I was sleeping, so I didn't catch the buy. So the buy actually delivered. So this was the next trade I took here. This was my next trade. Yeah. So as markets came here, so there was a zone around. Yeah. I started looking for another sales. I had this key level on a weekly. So I want the market to reject from that zone for me to engage on sales. Taking out this high as liquidity. Taking out this high as liquidity. So I have to wait for confirmation. Not that market will just get in and I'll start selling. No. I have to wait for confirmation. So I waited for confirmation on that zone. Okay. This was the key level over here. This was the key level. Then this was liquidity for the zone. The markets came and gave me this nice confirmation. You can see sweep of liquidity, break of structure, or change market structure shifts. This is it. This is a break of structure. This is a market structure shifts. This guy. So this was the key level here. Cool. But then this was like the actual, let me say, this another zone again. When I say zone range, this was a daily range, a daily zone that will actually give us the last that if market takes it out, it will be our major market structure shift. But the market is just reacting from a weekly zone. So I had to analyze this. This was a break of structure, market structure shifts. Then market swept this first high, then gave me this another break again, but it was a sweep. But I actually knew that giving me this kind of momentum to the downside, we are selling. So it took out this low. So I had to wait for a retracement to come to this side. So I took a sell from here. took a sell from you. I took a sell from you. This was my liquidity. You know why that's important. This was my liquidity. This one was actually in the first 5 minutes. Is it? I use this for as my sell zone. This was my liquidity. Just targeted one store. Just targeted 1:8. But then I had this before I analyzed this sell. I had this buy. This buy. In that I want markets because that is a daily zone. But then I'll be entering the buy to take confirmation. But the trade was actually an SL trade. It was SL because the confirmation was the stop loss. I didn't mean I even entered in impulsive mode. So I'll just give me some profits. So this was the liquidity zone. That's why I actually placed the target of this sell. This one. The target was here. Target was here. And the SLB, this one was the SLB. So actually gave me 7.6 ABAP. But it's still here 1:8. But this is why I actually TP this one. But then as the buy came here, okay, then so okay, let me just wait for confirmation. I'll not be entering impulsive because we are coming from a weekly zone. So the buy actually gave a confirmation. But the buy I was actually targeting this high. Even though I had that sell bias. But hey, but you can't actually predict the market completely. So we are just reacting to what is given to us. So as market came to my zone, it actually gave a sharp rejection. And then I said, okay, this is a sweep or a break of structure market or a market sweep. Then a market structure shift. My first value pullback, which is this an inducement. This an inducement. Then I wanted to take a buy here, but it was a peaceful SL. I call this kind of SL a peaceful SL. Why I call it a peaceful SL is that is that it's not be dancing around your zone, giving you all those heart attacks, all those things. It was just a peaceful one. It just came once and then gave me the SL. Then I had to buy a rest for the. But this happened on Friday. It was on Friday that happened. So after how many months I traded BTC, this was the first SL I had. So I had 3 months on wins on BTC. Let me count it. 3 months win on BTC. After hitting all these major SLs at this zone, so I had to go and rest and know what I'm doing wrong. When I got to my losing streaks, I took a week break, but a week break from taking live trades. Where I was analyzing, backtesting, know what I'm doing wrong before I came back to chat again. So I took 1, 2, 3, 4, 5, 6 trades on BTC. So it's not much that you must actually be catching every movement. No. So from April 19, when I got back to chat, to currently, okay, to July 28th, I didn't have any SL on BTC. That's actually how many months? 4 to 5 months. If I'm right, April, June, July. Okay, that is 2 months or 3 months thereabout. So I actually took 6 trades in 3 months of BTC. So it was all wins until now. And this SL, I already knew that it's actually coming from a very higher time frame. zones, which I could just delete that limit and just wait for a major sweep of flow before engaging on any bites or any sales. So this was a careless trade. So but then I was just reacting to what market is giving to me. So this was an SL. Now the next thing I'm expecting on BTC now, let me believe it will be blocking us. So next thing I'm expecting on BTC is that as BTC has reacted from my weekly zone, I'm still bearish on BTC though. Still bearish. This is it. So markets reacted from my weekly POI or my weekly key level. This is it. So taking out the previous weekly high, then this is the low that we need to target. But then overall, my overall target is low. So I'm still bearish on BTC. And if you watch this week that we are now closed out on a massive engulfing. So I'll be looking for sales on this zone. This zone here. Let me check the daily, or if I have something on the daily. Okay, on the daily also I had this, so I'll modify this sales zone to here. So inside of here I'll be taking sales, but I'll be only engaging on sales here if only this day or any day, let me say, or a day next to this one, we just come somewhere like this, close out, because if you can see there is no liquidity paired to this guy. Unlike here, you see here, before market sold this guy, that actually came to my SL. Before market sold from the other market takes out the daily high as an engineer liquidity, or to give you a liquidity, let me say near here, that it will take out and engineer that move. You can see before market made this high, it came a day traded near the POI or the key levels, then closed. Then the next one then took out that high, then sold. So I'll be expecting this same thing because there is no liquidity that is resting somehow like this. Let's say you had something like this, and that closed out here. Now then I'll be using that guy as my liquidity. Then I'll just go and place my sell limit over there. But there's nothing like this. So I'll be looking for something like this to play. So taking out this high, this guy has something. So looking for something like this. Maybe say body candle. Use the body candle. So I'll be waiting for market to come and take out this high, then sell this way. And if I sell, this will be my target. Yeah, my targets. So now I'm looking for more sales till this low is being taken. But then I still have this. Then I'll be taking sell till I get this key level, because this key level also might actually reverse price. So we can actually tell what will happen there. All we just do is we just react to what price is given. So this is the key level that I'm stopping my sell. So I have this key level, I also have this one again. I have two key levels. So I'll just be looking for sales. If market, let me say, violates this one, I'll look for sell from here to here. If market violates it, I'll continue looking for sell. Now my overall bias on BTC is this. Let me go to the monthly. I'll tell you what I have on BTC. So I've been selling BTC, buying, selling, buying. But here is where I'm actually expecting buys to continue, because it is an all-time high there. So what I'm expecting on BTC is this, to take out this low, and buy from here. And again, I also have this bias again. This one is just for the recent one. So I would like to see BTC. I'll be expecting BTC to take out this previous monthly high as liquidity, then bounce out from this open close that is here, then sell on that zone. So these are my two. So but we can't actually tell the market what to do. All we just do is just react to what it gives to us. So these are my two buyers. When the market gets here, I'll be taking major buys from here when I see my reversal setup on the daily, not on the on the daily. Now we're engaging on buys till this high is gone. So this is what I actually have on BTC and how I've been trading BTC for some while now. This is why I've been expecting buys to come on BTC. Because after I took out this high, our major first pullback was this. This is a liquidity deposit, and the nearest PI to it is this breaker block over here. This breaker block. And inside the breaker block, we have this indecision candle. So we can modify this indecision candle. So I'm expecting buys from here. So thank you. Thank you for watching. If you really find this video interesting and educative, please subscribe or follow and like and comment BTC. So thank you.